Ladies and gentlemen, good day, and welcome to the Tube Investments Q3FY25 earnings conference call hosted by IIFL Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anupam Gupta from IIFL Capital. Thank you, and over to you, sir.
Yeah, thanks, Rico, and welcome everyone to the Q3FY25 results conference call for Tube Investments. From the management, we have Mr. Vellayan Subbiah, Executive Vice Chairman, Mr. Mukesh Ahuja, Managing Director, Mr. A.N. Meyyappan, Chief Financial Officer, Mr. Jalaj Gupta, CEO, TICMPL, Mr. Gopalakrishnan, CFO, TICMPL, Mr. Shivdeep Singh Jammu, Division Head for TPI, Mr. Sivakumar, Division Head for Metal Form Product Business, and Mr. U. Rajagopal, Division Head for TICL. To start off with, I'll hand it over to Mr. Vellayan Subbiah, and post that we can move over to the Q&A. Over to you, sir.
Thanks, Anupam, and good morning, everybody. I'll just go through results for the quarter. It's been a fairly flat quarter. Revenue in Q3 was at 1,910 crores compared to 1,898 crores for the same period last year. The profit before tax was at 212 crores as against 210 crores in the same period last year. ROIC for the quarter was 43% compared with 54% in the previous same year period. And free cash flow for the quarter was 70 crores. In terms of each of our businesses, the engineering business had revenue of 1,212 crores compared with 1,229 crores in the corresponding quarter. The PBIT was at 156 crores as against 153 crores in the corresponding quarter. The metal form business had revenue of 400 crores compared with 392 in the corresponding quarter last year. And PBIT was at 40 as against 47 in the corresponding quarter. Our bicycle business had revenue for the quarter of 142 compared with 147 in the corresponding quarter, and the loss was at negative 1 crore as against 8 crores in the corresponding quarter. Others had revenue of 252 compared to 219. And PBIT was at 11 compared to 14 in the corresponding quarter. At a consolidated level, revenue for the quarter was at 4,812 as against 4,197 in the corresponding quarter. And the profit was at 427 as against 395 in the corresponding quarter of the previous year. CG Power, a subsidiary in which the company holds a 58% stake, had a consolidated revenue of 2,516 crores as against 1,979, and the profit before exceptional items and tax was at 335 as against 264 in the corresponding quarter. Shanti Gears, in which the company holds a 70% stake, had revenue of 158 crores as against 126 crores in the corresponding quarter, and profit before tax was at 35 crores as against 24 crores in the corresponding quarter of the previous year. So, Anupam, let me stop with those comments, like you said, and we're happy to turn it over to everybody for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes from the line of Nirvam with Unique PMS. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. So my question is, we have seen that the market leader in EVs has shifted the entire scooter portfolio in chain. So are we present in this market? And do any of our OEM customers also plan to shift their EV scooters to the chain drive?
So as of now, it is at a development stage, which maybe, let's say, even IC scooter earlier as well as EV scooter is not using the chain both. But however, there is one OEM which is working for converting the belt into the chain, but there is an initial stage of development today.
Okay. And so does this also bring back a focus to this chain market, given that chain might not get obsolete with EV?
Yes, it will not get obsolete because motorcycle growth continues. At the same time, maybe the replacement cycle, maybe even if you consider about 2 to 3 years for chain replacement, there is a huge population of vehicles available in the aftermarket area. So we don't think at all the chain market is going to get obsolete.
Okay, sir. Yeah, thank you. That's it from my side.
Thank you. The next question comes from the line of Anupam Gupta from IIFL Capital. Please go ahead.
Yeah, thanks for the opportunity. So the first question is on the clean mobility business. If you look at both the three-wheeler as well as the truck side, the Vahan data suggests that the volumes were up Q1Q for third quarter versus second quarter. But the revenues have seen a decline Q1Q, 146 crore going to 127 crore. So what explains that difference in the revenue side of it?
Yeah. So our volumes I'll talk about the three-wheeler business. Our volume for Q3 were the same as our volume for Q2, whereas at TIV, there was an increase of about 19%. And this increase was primarily on account of festive season like Diwali, etc., where the impact is more in the north and the west states, whereas our stronghold in terms of the market presence is more in the south states. So we held on to our market share in the south states, and that explains as to why our growth was not in line with the growth of the TIV, which was led primarily by the north and the west states. This is on the three-wheeler business, but our volumes were the same for Q2 versus Q3. As far as the truck business is concerned, against 42 trucks which were commissioned or delivered in quarter 2, we were able to do 36 numbers in Q3. So combination of these two explains the drop in the top line for Q3 vis-a-vis Q2.
Understand. Okay. And what would this be the main reason why the losses would have also gone up, or losses also has a component for the new launches which are coming up?
Yeah, this is Gopalakrishnan. Basically, in three-wheeler business, the PM e-brake, the incentive benefit got reduced. Earlier, in Q2, it was 50,000 per vehicle. As the quantum of the eligible vehicle limit got exhausted, industry per se, I'm saying. There was a reduction in incentive benefit by 25,000 rupees per vehicle. So it was having some impact. The second one is, we have commissioned China Tech Center in Shenzhen. So, basically, there is a technical service fee which is, absorbed, part of the product development expenses. And in case of tractors and, smaller commercial vehicles, basically, we are in the process of, commercializing the operations, and we are getting to start our production kind of mode. And, since the manpower is being ramped up in both the businesses, there was an increase in fixed cost to that extent. And, our product development spend also has gone up between Q2 to Q3.
Okay, understand. And just continuing on the small commercial vehicle, and I think that you also launched the cargo variant in the Bharat Mobility Show. How soon should we see this at the dealership level for these two new products?
So the plan is that in quarter 4, both small commercial vehicle as well as the cargo, the super cargo, we will be seeding in the market in quarter 4. The full-fledged commercial sale we will begin from April of 2025.
Okay, understand. Fine, this is helpful. So the second question is on the metal form product business. What we see there is that the margin trajectory has been pretty weak for this business compared to what we were doing, let's say, 3-4 quarters back. So what is driving the correction in margins for the metal form product business, especially since railways anyways was missing for the last many quarters also? So what's the trend there?
So, Anupam, like you mentioned, one reason is railway, because of the pricing coming down. Second reason is TV growth was little down in the quarter 3 because of the model change and the year change, which the road frame business maybe has not done. He has done good in line with the market, but maybe that segment was not doing good in the quarter 3, and that's resulted into little bit drop in the margin, and which will come back.
So, but what should be the, let's say, normal sustainable margin for metal form business? Assuming things are on track, then what should be the margins which one should assume there?
At a PBT level, we'll continue to go around 10 to 11% band. That will be the margin guidance.
Okay. Fine. I'll come back in the queue, sir. Yeah. Thank you.
Thank you. Before we take the next question, a reminder to all participants, you may press star and 1 to ask a question. The next question comes from the line of Abhishek Ghosh from DSP. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. So just in terms of the engineering division, the top line has been fairly muted. Is it because of the correction in the metal prices, or has the volume also been muted? And also, if you can help us understand on the exports piece, given the overall challenges that one is seeing in the overseas economy, is that also impacting our exports volumes and revenues?
So as on Q3, no impact of the exports volume, and we will continue to do whatever engineering division was doing, close to around 19 to 20% of the exports. So that momentum continues. But going forward, maybe let's say seeing the uncertainty and all those things, maybe environment is volatile, and we'll see. But as of now, maybe as far as engineering division is concerned, we enjoy a good relationship with all the OEMs. So we expect that to continue.
Okay. So then what's the reason for this muted performance? Is it more led to lower domestic volumes, or is it a function of metal prices? How should we look at the overall?
It is a function of the metal price.
Okay. So in volume terms, you would have still seen healthy growth. Is that a right assumption, sir?
Yes, we have grown in the volume terms around 7 to 8%.
Okay. Thanks. So just in terms of the EV part of the business, from a 3-year roadmap, while you may have some market shares in mind, but in terms of your own assessment, you think, is it a combination of both margin improvement and market share, or is there a more focus on getting the market shares for the first 2-3 years and then indigenize and then get to profitable route? If you can just help us articulate from a 3 to 5 year perspective. Thanks.
Initially, since all the 4 businesses are in their initial stage of product life cycle, of course, the focus would be more on improving the market share and the numbers, with a definite eye on the margins as well. But between the two, the focus would be more on improving our presence in the market and penetration, because it's a market which is evolving, and there is continuous aggressive work which is going on to improve our realization in the market, and also to look at reducing our BOM cost as well. So, which is a time-taking process, but initial focus would be to improve our numbers and market share.
And just to add, I would say that ideally, with the 2 products that are already in the market, we'd like to at least get to operating break-even in the next financial year. And obviously, kind of the other 2 products will still require investment.
Okay. That's helpful. Thanks. Sir, we have also seen a fair amount of increase in the depreciation in the current year. So if you can help us with the capex that's incurred in 9 months, and for FY25, how should we look at the capex?
You are talking about TA standalone?
I'm talking about the standalone business.
Yeah. The standalone, as of December, we have done 295 crore of capex.
The question is in the increased depreciation and other things.
Yeah. Depreciation is because of the higher capex only. We have also invested in Nashik consultant, and Nashik has started depreciation right now in this quarter, and that's a major reason for the increase in the depreciation.
And Nashik, which product?
It's CRSS product. Steel strips.
So obviously, kind of a lot of the capex has been in the engineering business. And they're kind of, as demand picks up, we will basically, and those businesses start to scale, we will see growth in that business.
Got that.
Revenue growth and margin growth.
Okay, so you have that visibility, and that's why you're investing now, because you are seeing that whenever things pick up, you want to be ready for that. That's the way to look at this business.
Yes, and obviously kind of one of the things we started to do in each of the businesses is regionalize more. So when Mayappan talks about steel strips, we basically now are the same business that we had, the same manufacturing capability we had in the south, we've now moved that to the west. And similarly, so basically in tubes now we have presence in the north, west and south. And so basically we want to kind of have regional presence to reduce logistics costs and therefore improve margins a bit on each of the products. And also our ability to serve customers quicker, basically because we're of the proximity to them.
Got that. Okay, sir. Thank you so much and wish you all the best.
Yeah, thank you.
Thank you.
Thank you. The next question comes from the line of Jeetu Punjabi from EM Capital Advisors. Please go ahead.
Hi, thanks for this. Vellayan, I have a question for you, which is a bigger picture question. You've seen a slowdown across the entire segments, all segments of the economy and the business. You're seeing a lot of pressure across, even globally, you're seeing cyclically things are weaker. How do you read it in terms of what are the things that you would be doing to neutralize it, to differently and kind of think through how do you navigate the next 12 months in your mind and what would you do differently?
Yeah, so, I think again we got to, our preference in some of this is to take a slightly longer term view, right? And I do believe that longer term, things are still intact, obviously kind of there are macro uncertainties with what's happening globally, especially with kind of the changes in the US. But, I think as far as we are concerned, the thesis remains kind of intact, which is like, the core businesses, we need to look at a certain amount of diversification from them because otherwise we do see challenges in kind of in maintaining the levels of growth that we're used to. But I do think that, the broad thesis is continue to invest, diversify a bit, right? And, things will continue to kind of support the growth. I especially think in India, things will continue to support the growth. And I know there have been some negative reports of late, but I feel that India has enough strength to go into to areas of growth, especially using India as a domestic consumption base and then using that as a way of getting to global markets. So I don't think that thesis is fundamentally. I still think that thesis is intact, Jeetu.
Okay, and is there anything like in this environment? Would you do anything differently? Is the communication to the operating teams any different, or are you looking at newer opportunities where you think there's going to be more tailwind that is going to be more exciting going forward because of whatever changes the environment is seeing?
Yeah, I'll tell you, if you separate out kind of, so if you take kind of the TI's core businesses, I almost put things in three buckets, right? Kind of TI's core businesses, kind of we start looking at opportunities for growth and what we should be doing from like a prudence perspective, right? TI's core businesses, obviously, what the numbers are reflecting is kind of a level of flatness where we would have expected kind of, more growth in the third quarter. That growth did not come. That growth, so basically the question is when will that growth come back? I don't think we have the answer to that. But I would just say that when the growth comes back, we're ready for it. Now, so from that perspective, kind of, I always think that timings for expansions can never be perfect, but the important thing is that we kind of have, expansions in the ground now on the engineering business, which will be able to kind of make use of that growth when it comes back. The second is obviously a level of softness on the export markets, but I just think that just means that we have to intensify our efforts on those markets. So I definitely think that the export markets, have to be a growth sector and will continue to be a growth sector for India. Third, in terms of new opportunities and how we look at them, I think my broader concern is that a lot of the new opportunities, especially we look at inorganic, tend to be kind of very, very steeply priced right now, right? So I don't think it's a time to kind of get into too much of that at this stage, right? Because of kind of the pricing of kind of where most opportunities or assets are today. So I don't know if that covers broadly.
No, that does that. In fact, the point I was also trying to check is, are there acquisition opportunities in this weaker environment that might be there? And I hear you say that they're not priced rightly yet.
That's correct.
Okay. Thanks so much, Vellayan. Good wishes to you and the team.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question comes from the line of Jinesh Gandhi from Ambit Capital. Please go ahead.
Yeah, hi, sir. Continuing on the export side, so given that there are talks of increased tariffs in US, can you first talk about what is our exposure of exports to US, and secondly, how do we see this opportunity from the US market perspective, given currently India at least is not a part of those tariffs being put on. So how do you see that opportunity?
So maybe particularly as a company, we do about 35 to 40% exports to the US market, and but the relationships are a little longer. Maybe half of those relationships are with the OEMs, which requires a long product cycle for approvals and all those things. We don't see a challenge there, but coming to the balance is distributor side, maybe it depends on how the tariff plan is also be going forward, which none has the answer, and we are watching for it.
Okay. So currently our exports are largely driven by engineering business. Do you see opportunities in other segments as well, like metal form and industrial chains as well?
Yes, we see opportunity in the other parts of the segments. One is the bicycle business. We see the opportunity for bicycle, as well as in the metal form part, we see opportunity. We are doing some product development in the chain business also for higher city bikes. There is opportunity on it.
Got it. So would it be fair to say that the 20% export target which we were talking about has some upside risk as exports get more broad-based across businesses?
So, like Mr. Vellayan was mentioning, we are ready maybe in terms of the capacity for maybe domestics as well as this exports market, and work is on the product development side. And like Vellayan said, that area of growth opportunity lies still in the exports in the vehicle.
Got it. And the second question pertains to the ELCV, which we showed at the expo. We were also taking bulk orders there, and so any feedback from your dealer partners and the order booking which would have taken on the ELCV?
So there were memorandum of understanding which were signed with the logistics provider, and those were for the deliveries in the next fiscal. As I said, as an answer to the previous question, in Q4 we are planning to seed in vehicles with some of these customers and other customers as well. So it is right now premature for any feedback on the product is concerned, but as far as the overall appearance, aesthetics, and the looks of the product is concerned, from Auto Expo, we have got a very, very positive response from all the stakeholders, from customers, financiers, dealers, and even the competition as well.
Okay, but any quantum of MOUs signed in terms of number of deliveries which planned for FY26 based on the MOUs?
It will not be. Yeah. It will be premature to comment on that. But we have a decent number of MOUs which has been signed.
Got it. Okay. That's all from my side. Thank you.
Thank you. A reminder to all the participants, you may press star and one to ask a question. The next question comes from the line of Rushabh from RBSA Investment Managers. Please go ahead.
The first thing I just want to understand, we are expecting some certifications in the medical devices for the export market. What is the status and what is the expected growth trajectory here? I think it's slightly below what we were expecting earlier.
So it is because of the name change of the company, which has taken a quarter or two extra. We expect that entire CE certification to get over by Q4, and after that we expect a good growth because customer relationship while the CE certification is happening, it is already getting built up parallelly. So we expect that to give us growth credentials going forward.
And my second query was to Mr. Vellayan. What I just want to understand from your end, what is the reason for the acquisition of the Uber Group through this private investment arm rather than any of the listed entities? And my related query was, what is the framework to decide what type of businesses or sectors would be done to the private arm versus the listed entities? Just a broad thought process.
Yeah. So I think the broader way to look at it is one of business platforms, right? Which is, if a platform is in a totally new segment, then it will not make sense to kind of do it in one of the public entities that are basically, so for example, I would see, TI is kind of TI was predominantly kind of auto, and then we have some industrials in it. But when we look at an area like inks and chemicals, which is totally process-driven and kind of chemistry-driven, it doesn't fit in any of the existing platforms today, neither is it in Chola. So if it's a new business platform, we will do it outside of the listed companies. But if it's something that in the existing platforms, then we will do it within the platform.
So would the promoter family have sufficient bandwidth, given your full involvement in the listed entities? Is that not a concern? Given you might acquire more entities in the private arm as well. So how do you see this?
Yeah. No, absolutely. I think the bandwidth question has always been asked. I think, in all honesty, the bandwidth question was asked, even when we kind of, were growing one company at a particular pace. Then it became 2, then it became 3. But I think that even, if we don't grow from a leadership perspective, it's basically the opportunity that the country offers today, right? That, that there is that level of growth. And if you believe that, we are growing as leaders, then we have to be able to handle additional bandwidth, right? That's part of the process of growth.
Okay, sir. Thank you.
And obviously, what we've done at that point, if you look at how we started, at one point, I was running Chola or I was running TI. Now each of the businesses have their own CEOs. And we have a whole structure to basically kind of support the level of growth that we aspire to.
That's very much helpful.
Thank you.
Thank you. A reminder to all participants, you may press star and one to ask a question. The next question comes from the line of Salil Desai from Marcellus Investment Managers. Please go ahead.
Thank you. Hi, gentlemen. My first question is on the three-wheeler volumes which were impacted by the subsidy regime undergoing some changes in the quarter. Now, given where we are in terms of
sir,
visibility.
Sorry to interrupt you, sir. Sir, may I request that you use your handset, sir? Your audio is slightly muffled, sir.
All right. I hope it's better now.
Yes.
So my question is, on the subsidy regime change which kind of impacted the three-wheeler volumes. So given where we are today in terms of visibility on availability of some of these subsidies, where do you see volumes, say the next 12 months or so? And related to that is, where would you see profitability if there are production costs going up because of fewer subsidies? So any visibility on these two aspects?
The subsidy part which Gopal mentioned was to the answer on the profitability. But as far as the three-wheeler volumes are concerned, the electrification of the three-wheeler market is improving with every quarter is the data that we have. April to December, about 25% of the total three-wheeler passenger market is what it is, electrified or, what gets sold is electric. So we see a very positive upside in terms of the electric three-wheeler, both passenger as well as the cargo is concerned. And as regards our plans, we have also aggressive plans both in the passenger segment as well as also in the cargo segment, which we will seed in Q4 and scale up our volumes in starting April on.
Right. And how does the profitability get impacted given whatever changes you would see the subsidy regime goes through?
Yes. So that would be a challenge industry-wide, not only for us.
Broadly, what we look at again, right, is what I think what we are targeting in the next financial year is to see if we can get to operational break-even in that business.
And this target is irrespective of whatever the external, in the sense the subsidy regime would be.
That's correct, right? So we're already kind of beginning to understand and factor in what we think we will get off the subsidy, because that's very clear for three-wheelers.
Right.
And then basically make our plans around that, both in terms of volume planning and what we need to do on the cost side to deliver on it.
Got it. Secondly, on this China tech center, if you could throw some more light on what the plans are, and if maybe an example with where this could benefit you in terms of whether it is.
Yeah, so I think it's a very early investment at this stage. So it's too early to kind of even figure out. So it's an early investment at this stage. So I think let it develop, and then we'll be more comfortable giving commentary on it.
Sure. And lastly, in terms of funding available at TICMPL, I'm sure the numbers fundraised were pretty large amount, but now we have, I think, from a losses point of view, almost 650 crores till date. And if the current quarter is say 100 that you would expect the next couple of quarters, then if you could just give us a sense of where or how much funding is remaining, any plans to maybe look at some more de-risking?
So we feel fairly comfortable that we have enough runway for at least 2 more years. With the funds we have.
All right. Okay. Thank you. Thank you very much.
Thank you. The next question comes from the line of Nishit Jalan with Axis Capital. Please go ahead.
Hi. Thank you. Thank you for the opportunity. Vellayan, my question is top-down on the whole electric vehicle space that you are looking to enter. I think we started into this business in the last 2 years and have made reasonable progress in some segments. So just wanted to hear your thoughts. In the last 2 you would have made certain plans when you started this business. Do you think you are on track, or there have been some disappointments on an overall basis? And still wondering, trying to understand what is the right to win of Tube in this business, right? Because incumbents have now started, even in the two-wheelers we have seen that happening now. In three-wheelers also, I think Mahindra, Bajaj and all are doing fairly well. So just wanted to understand what is the right to win for Tube, or why will Tube succeed? What will make Tube succeed in these segments? Yeah, so some thoughts around this one. Thank you.
Yeah, so first on overall direction, right? Kind of when we started, what we said is we'd like to deliver $1 billion in revenue by 2029, and I still believe that and profitable, right? So basically what we said is kind of a profitable $1 billion in revenue by 2029. Now, I do believe that thesis is still very much intact. And I do believe that we'll be able to deliver that. Second, in terms of your question on kind of, how will we be able to compete? Honestly, I think that the market is just beginning to play out. We're still in very early days in terms of how the market will play out. You talked about three-wheelers, and so broadly the way I look at it is, if you take the heavy truck, for example, at this stage there is no other player that basically has that product in the market today, and I believe that we'll have at least another year of kind of being the only player. So we will have the chance to basically develop a good starting position. But I actually think even what's happening in three-wheelers is encouraging, because of the percentage of the market that's moving, and that starts happening when 2 or 3 players get into the segment. right? So basically, there I would say that, we have to, and we are aspiring to particular kind of market share that we will get to in that product. And I do think that, because obviously kind of the incumbents have an advantage in terms of, the presence and geographic presence in terms of dealerships and distribution. But I do feel that, we will be able to overcome that and get to kind of our stated internal, market share target. Though it will still take, so we'll get to a certain percentage of that target in the next financial year, and then perhaps get the target kind of in the financial year after that, right? So that's 26, 27. But we've always taken a long-term perspective to this. And I do feel that the thesis is totally intact from that perspective as well.
Okay, thank you. Just one follow-up here. I think a few quarters back in the Concall, you did highlight that right now you are doing more of an assembly, and over a period of time, the idea is to build R&D capabilities in the battery pack and some of the other components. So just wanted to understand where are we in that journey? How have we increased our R&D team? Any particular components where you think we have started to build in-house capabilities, especially on the BMS battery pack? Any of these components where you are very close to getting them in-house?
Yeah, so just to give you a sense now, we have over 250 people in R&D. And to start, just talk about components and what we're beginning to do at a component level. So for pretty much for the truck, and I would say for the truck, all battery packing is basically going to be done in-house. And for the small commercial vehicle as well, we're going to do batteries in-house for ourselves, battery packing in-house for ourselves. So that process has started. But I think the more relevant thing is what happens at the component level. And we've now taken a 2-year path to basically where we believe that a lot of the control units, right, whether it be MCUs, the VCUs, the telematics, a lot of that, will be developed. We will have our own capability. So the development process for that has started. And I do believe that that's going to be a significant advantage, because once you get to your own capability there, both on the hardware and software front, both from a cost perspective, because those components are significant in terms of the BOM, and from a market advantage perspective, having your own capability there will be a huge differentiator.
Thank you so much, and all the best.
Thank you.
Thank you. The next question comes from the line of Prolin Nandu with Edelweiss Public Alternatives. Please go ahead.
Hi, Vellayan. Thank you for giving me this opportunity. A few questions from my side. The first is, while you mentioned that on, let's say, TIC and some of the inorganic growth opportunities, valuations are quite expensive. But when we look at the TI2 part of our business, do you think in, let's say, next couple of years, you want to focus on scaling up the business where you have already seeded some investment into, or we will hear something in some of the new segments as well? And within that investment which you have already seeded, which is the business which you are most optimistic on in terms of the size and profitability part?
Yeah. So first off, I think what you stated was correct. Was a lot of the focus is going to be on growing the existing businesses that are part of TI2. But I think in terms of your question on which one are we most optimistic about, I'd like to say that we're fairly optimistic about all the businesses. Obviously, they'll have different growth rates, right? And kind of, I would say, so there you have TI Clean Mobility that is further along on that growth journey. And that's why I said that, it becomes quite important for us to look at achieving that operational break-even on a couple of businesses there. Because then that gives us further impetus to push it into the next level of growth. But, obviously, we're fairly optimistic about all the businesses going in.
Sure. Thank you. And on the investment side, right, as to how you decide between your public companies and your private arm. And in the past also, you have answered this question that, let's say if we talk about investments or how you will seed new businesses in your listed companies, it would be more on a capabilities of those companies and then also on a case-to-case basis. Anything changes, Vellayan, on that part, or it still remains the same? And is it the case that right now, maybe in the segments where Tube want to probably enter into, whether it comes to inorganic part, things are expensive, and in, let's say, a CG Power, maybe there the visibility of near term in terms of investments are slightly more than Tube. Is that a fair way to look at things, or that's not a right assessment?
No, I think you already came back to you answered it a bit in terms of saying that, like right now the focus is more on the TI2 part, right? Kind of from TI's perspective. And we've got enough. So, I mean, obviously kind of, this is one of the challenges where depending on what we did, investors would also ask us the counter question, right? If we got into like 7 new verticals within TI, then the question would be, why are we getting into 7 new verticals, right? So definitely kind of the focus now needs to be to deliver on the current businesses we've got, right? What I've always said is kind of, at best, we can add 1 more vertical to TI. But otherwise, kind of TI has its hands full with the current businesses, and our focus needs to be on how we grow these businesses. Similarly, you can see from CG, we made 2 big investments there. The semiconductor, both on the packaging side as well as the design side, kind of, and so basically, once you've got in, then I think the focus needs to be on kind of growth within those segments versus adding new verticals, right? And so that comes back to the thesis on why we would not distract some of those companies with new areas versus keeping it in private entities.
Sure. That's it from my side, Vellayan. Thanks a lot and all the very best.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question comes from the line of Anupam Gupta from IIFL Capital. Please go ahead.
Yeah, thanks for the opportunity again. So just a couple of questions. Firstly, on the EV business, in one of the calls, I think a few quarters back, you had also mentioned that exports can be an opportunity for EV business as well, given the sort of costing we are able to achieve for trucks here. So how do you look at that export for all the 4 categories which you are looking at, let's say in the next 2-3 years? Do you plan to go outside India for these products as well, or how do you look at that?
Yeah, so I would say that the first thing, Anupam, is, so we are exploring, but, I would actually say that, so definitely if it is a 2-3 year horizon, yes, I do believe that we will look at it. But like I said, first is to establish a good, solid position here. But you're definitely right, in a 2-3 year horizon, we will look at that as well.
Understand. And the second question, if you can just quickly update on the 2 things. So it is a small investment, so it's a Moshine. If there is any change we have been able to achieve so far, given the tough market, and also secondly on the optical lens business, if there is any update on that.
So Moshine, we have not been able to. I mean, we've not been able to kind of, and honestly, kind of the whole electronic segment continues to be a segment that, I would honestly say that we've not been able to have that much success at. So the Moshine business definitely, it was a small investment, but, we've not been able to basically get it to any scale, predominantly because we still see a lot of that supply chain is controlled and managed by China in China. And so I think that's definitely been a huge learning for us. On the lenses side, I think it still continues to be an area we explore, but it's definitely going much, much, much slower than we thought we could basically kind of scale. And that's predominantly, again, I would say around learning curve on some of the new businesses and our ability to get some of these new businesses up to productivities and yields that allow us to get to the cost points of the Chinese.
So Moshine, we understand that it's supply chain tough to break in, but optical lens, is it more of a production issue, or what is the issue which is plaguing the scale up here?
So there are a limited number of customers, right, that are basically willing to just source at a lens level from India, right?
Okay.
So basically we have two choices. One is to kind of double down and go into the lens modules also ourselves, right? And then be able to kind of get to a lens module, a full camera module, and then be able to sell that to a customer. So that is one choice. The second choice obviously is to just sell the lens to people who will then assemble into a lens module. And that's where there are limited customers. And that's the path we've been taking now versus basically going up the chain to the camera module, just because we don't have the comfort, again, like I said, to match Chinese pricing, so that and if we don't have that comfort, we don't feel comfortable yet making that capital investment. We're going all the way to camera module. So we want to basically see if we can get to efficiency levels with the limited customers we've got, right? That then would give us comfort that we could expand this product. But till then, we're not going to be able to expand on this.
Sure, understand. Yeah, that's all from my side. So thank you.
Thank you.
Thank you. The next question comes from the line of Samyak Jain with Marcellus Investment Managers. Please go ahead.
Hi, sir. Thanks for taking my question. Just two questions on the EV distribution side. Firstly, can you please update us on the latest dealership counts, and what is our target to take it for FY25 and FY26?
Okay. So, for three-wheeler business, we have 88 operational dealers, and we are planning to wrap it up aggressively and maybe look at 100+ dealer by end of this fiscal. And we have aggressive plans for the next fiscal, which may not be appropriate at this point of time to share. When it comes to our small commercial vehicle business, we have issued about LOIs in about 15 cities, and we hope that those dealers will be operational by the end of this financial year. For the tractor business, likewise, we are looking at about 10 dealers by the end of this financial year. So this is about the three businesses where we are going to operate through the channel.
Understood. And sir, in terms of your expansion plans of the dealerships, are we prioritizing any particular geography like the north, east, or west, or is it we are expanding pan-India level? So how do you think about when it's in terms of expanding the dealerships, prioritizing or throughout India?
Yes. So it is varying from business to business. So, for example, in tractors, we have identified the states where we will be primarily operating in based on various factors, and it is those states that we are focusing in, as far as expansion of channel is concerned. Likewise, for small commercial vehicle business also, we have identified cities and geographies where we feel that electric small commercial vehicle will have a very natural pull, and therefore those are the cities that we will be focusing on. So it will all depend on which are the priority market and states, and accordingly our network strategy will also get driven by that.
Understood, sir. That's it from my side. Thank you.
Thank you.
Thank you. The next question comes from the line of Vipul Kumar Shah with Sumangal Investment. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, what will be the capex for electrical vehicles for next year?
We are looking at close to 300 crores kind of a capex across all the, four businesses.
Across all the products?
All the four. Yeah.
And sir, would you repeat the sales figures for all the products which you had, at that time my line was disconnected, so Would you
No, we
repeat?
didn't give the sales figures for all the products. Oh, you gave sales figures? Oh, you indicated a number of products sold for trucks, yeah?
For trucks, yeah. So, truck, it was 42, and our for three-wheeler business, it was 1,837.
Okay, sir. Thank you very much, and all the best.
Truck was 36. My mistake, not 42. Truck was 36.
Okay.
Thank you. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference over to the management for closing comments.
I think from our perspective, we, nothing specific from our side. So thank you.
Thank you. On behalf of IIFL Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.